So my name is Eric Heilman. I'm the head of research at blockchain.com, which is one of the oldest and most trusted cryptocurrency platforms, founded in 2011, well known for our wallet. Over 40 million wallets have been created using our platform. Also recently launched an exchange, and then today just announced a new borrowing product. So that's very exciting. You can read more about that on the block or coindesk.com. Before I came to blockchain, I was at the University of Cambridge and did one of the first major empirical studies of central bank digital currency, the Global Blockchain Benchmarking Study in 2017. We surveyed over 20 central banks.
Painstakingly.
Yes. But with the support of the BIS and the Financial Stability Board, and really learned a lot about central bank digital currency and the attitudes at that time, which I think still is really relevant to kind of where many central banks are today. So I'm looking forward to this panel and hopefully clearing the air and setting the record straight on what is CBDC and what its real prospects are in the near term.
Thank you very much again to CryptoCompare for having me here. My background, I'm at the UCL Center for Blockchain Technologies. My main sort of bits of research for the past 2 or 3 years now has been in central bank digital currencies. A bit about the center. We have now been running for about 6 years, sort of starting off with some research areas in peer-to-peer and the circular economy, and now probably boasting one of the largest sort of research groups in the world, with about 200 research affiliates and associates. So about 2 years ago, I think we hosted an event at the Federal Reserve Bank of Cleveland. I had the pleasure to invite Garrick. I don't know if you remember. You presented your timepiece there. So hopefully looking forward to pushing this discussion a little bit further.
Okay, so let's kind of start at the beginning. And I don't necessarily view central bank digital currencies as crypto. It, to me, seems a little bit more like digitized fiat versus a crypto asset token. So from your perspective, what is a CBDC? Is it the evolution of money? Is it digital money? Is it a competition for private money? What is it?
Yeah, I'm so glad you asked that question, because I've actually gotten pretty frustrated about this topic and how a lot of the basics, like what is CBDC, are not well understood. So first thing to understand about central bank digital currency is it already exists and has existed for quite a number of years. It's just that you and I, the retail consumer, don't have access to it. Only commercial banks like Barclays, HSBC, JP Morgan, et cetera, have an account at the central bank where they actually have digital central bank currency on deposit. So it already exists. The big thing that we're talking about these days with CBDC is extending access, perhaps to retail users, to folks like us, or maybe extending it to a Facebook, or allowing other kind of near banks or fintech or even non-banks have a direct relationship and hold accounts at the central bank. And honestly, I agree with you that there's huge differences between whatever form CBDC takes in the future and cryptocurrencies like Bitcoin. That's, I think, one important thing to understand. Second is, I think there's huge barriers to, in many countries, certainly advanced countries, advanced economies, to retail rollout of CBDC, where you and I would have access to digital central bank currencies. I think that is way underestimated. And if I could just compare this, for those of us who've been in the space for a while, it really reminds me, honestly, today, all the hype around CBDC, of the hype we had around DLT back in 2015.
Yeah.
The same kind of like, oh, this is going to transform everything. And certainly there is a lot of excitement with things like Libra and the People's Bank of China. And as we are seeing with DLT today, some real use cases have emerged. It's taken a lot longer than people estimated. It's been overhyped. There's huge barriers. It very much reminds me of exactly what we saw with DLT like 5 years ago.
Well, I'm going to come back to what's driving the hype. But before we go there, you mentioned opportunities. So, Thamim, what do you see those opportunities that could potentially arise from having retail access, as Garrick has mentioned, so for corporates, like a Libra Foundation,
Yeah.
or for payment service providers, people that don't typically have access to central bank rails? Like, why would we want this?
Yeah, I think just carrying on Gary's point, it gives the normal citizen to have ownership of centrally backed or centrally issued currencies, number one. And what that essentially means, we're going to begin to see a sort of disenfranchisement of sort of wholesale banks at large, which will hopefully create more governance in the ecosystem. And number two, I think there's going to be an element of sort of more public-private partnerships forming as a result of this. So you'll see folks like the Libra group having access to the real-time gross settlement payment systems, or even TransferWise, and then them being given permission to open up accounts on the same banking sort of system as some of the wholesale.
But what do people get out of that? So, us sitting here in the room, what kind of opportunity, or does it create an opportunity for me or you or Garrick to have something today, or access to something today that's cheaper, faster, better, less friction? Does it create that?
I think it does. It will allow normal sort of citizens to stake centrally backed currency. I'm not sure if you want to deep dive into that, which typically is now sort of, that right is owned by the wholesale banks. So just being able to open up an account directly with the central bank is quite revolutionary. I know we've been able to do it in the past, but now technology will enable us to do that. And then sort of the element of having cross-border sort of payments with a centrally backed or an issued currency.
I think, honestly, one of the biggest, value adds of central bank digital currency is the digitization of cash. And just like when you have cash in your pocket, it's a bearer instrument. It's not something that is, subject to a bank run like a bank deposit is, where banks can literally run out of money. The central bank can't, by definition, run out of something that they can produce, into infinity, digital currency. In theory, there would be some limit on the amount of plastic or paper they could even produce, right? But not with a digital central bank currency. So you'd have the same kind of properties as cash in digital form. That's a huge game changer. But it also is incredibly frightening for many countries around the world. So, for example, let's just take Costa Rica. Over half of Costa Rica is U.S. dollar, kind of denominated, and they're freaked out. Or any country that is maybe has, not a reserve currency or strong global currency is really worried about how easily, say, a digital dollar, digital euro, and Libra could basically move into an emerging market and destabilize the local currency. Right now, with physical cash, yes, over 75% of U.S. $100 banknotes are outside the United States, many in countries like Argentina, but there's still friction, there's still difficulty with moving physical cash in a way there isn't with digital. You marry that with a social network, and now you know why we're getting all this discussion around central bank digital currency. That could really change things dramatically.
Well, it was 4 or 5 months ago, you and I were at the CBDC, the OECD CBDC workshop with WEF, trying to identify what some of these risks that could impact a country should they go digital, right? And I remember one of the exercises that we went through, we were asked to think of all of the catastrophic things that could happen and what would be the impact if the government had, digitized their currency versus having cash to hand out. And I remember being really quite blown away by some of the, things that people were coming up with. Like, what if we get hit by an asteroid? What if, there's a global power outage? And I'm thinking, well, how will that happen? But what came up often were geopolitical concerns. And so, is there an ability for one country to be able to offshore their capital that they couldn't before? Did that create a competitive advantage? Did that create an opportunity for a rogue state to intercept, capital or disrupt an economy? So from a geopolitical position, I get asked a lot, and I'm not a CBDC expert, about, is all of this just a race to keep up with China? is this just a reaction to Facebook? And is it a reaction to, is China a reaction to Facebook? So can we just talk a little bit about that? Because I think there's quite a lot of FUD and hype around this that I don't necessarily think is rooted in real politics.
Can I add one sort of fine distinction about CBDCs and sort of with the advancements of sort of distributed ledger technologies is this sort of smart contract layer, which allows there to be an economic system baked into the digital currency. So you could look at sort of having interest-bearing or dynamic interest-bearing tools baked into the digital currency, which is quite unique and different to just a digital currency by itself. So maybe that sort of lays into the discussion of what happens when I'm quite sort of interested by, I think the world owes $1.5 trillion of debt to China. What if China move extremely fast in digitalizing, or they already have, digitalizing the currency? Will they become a cross-border? Do they have ambitions to become a cross-border tool or not? And what happens when all these countries that owe masses of debt to China, what if they sort of pull the rug on the US dollar as the global reserve currency and sort of ask these other debt-bearing nations to use Chinese sort of renminbi or digital renminbi? What does that then mean for the world?
Yeah, no, I'm glad you brought that point up. And so I think, again, there's a lot of confusion. So why has China been making a lot of noise about the digital yuan? Well, partly it was a response to Libra and the concern that, wow, Libra could really, take off. But also, inside China, Alipay and WeChat Pay dominate payments today. And, even though people think the Chinese government is all-knowing, all-seeing, the PBOC, doesn't have as much insight into, data that's on Alipay and, WeChat Pay servers as they would on their own. And so in some ways, a digital yuan is also a response to what's happening domestically to try to reclaim kind of control and data from the private sector. Now we've seen Libra slow down. Regulators have figured out they can, in effect, block Libra. So a lot of the pressure is off to do something, both maybe in China, certainly as well as in, Europe and the United States. And frankly, probably from the Federal Reserve's perspective, the status quo is really nice right now. The US dollar is the dominant reserve currency, and the longer that status quo can be maintained, probably the better, without introducing all this complication and risk around a digital currency and having to think about, do we actually let people open up accounts at the Fed? Do we start creating wallet software, or do we outsource that piece of it to the private sector? I mean, these are all complex things, but fundamentally, one of the biggest barriers to central bank digital currency, and I cannot stress this point enough, is the real risk that it presents to the commercial banking sector during periods of instability and stress, where you'd see potentially a bank run from commercial banks into the central bank. And no central bank yet has figured out how to adequately kind of safeguard against that issue. And until they do, I just don't see widespread retail CBDC happening anytime soon. That's the fundamental issue that's slowing this down.
Well, and we're experiencing quite a significant amount of economic uncertainty in the markets over the last week, really. I mean, every day you wake up and whoo, new day, right? So I think that is a really relevant point. But I do think that there was, and I don't know if it was a reaction to Libra specifically, or China, or a storm in a teacup, but, during Davos, we had the ex-head of the CFTC, speaking at multiple engagements about pushing forward, the digital dollar, and that the U.S. was going to be, the first to the post with their CBDC. And then we've seen a number of news stories over the last couple of days where, we've got smaller jurisdictions, as I mentioned earlier, that are, no, we're going to be the first to the post. So I'm just, where is this drive to do something? Is it just the natural momentum? Does this come on the back of cryptocurrency? Is this a wave of digitization that we should be expecting anyway because things move on? What's causing this?
Yeah, I mean, I think there's a general sense that we're obviously, continuing this multi-decade process of digitization, and that the idea that the only bearer instrument that has settlement finality is going to be a physical cash banknote. I mean, that doesn't make sense. And so at some point we need to modernize. The question is, how do you do that in a way that prevents things like creating bank run risk or financial instability? There's other things that are also really interesting about digitization. I mean, in the U.S. alone, for example, I mean, hundreds of billions in taxes are not collected every year. Partly that's due to cash being widely used. Partly it's due to other things. Smart contracts and building that into a payment system could automate a lot of tax collection. So there's that also kind of drive. Desires around money laundering prevention and so on. And how digitization, and this gets back to China also. And actually, something Ken Rogoff, a professor at Harvard, argued was that a digital yuan could maybe take off in the black market around the world where the US dollar dominates, because there is no digital dollar for the black market. I have, again, real doubts about whether or not people who are trying to cover their tracks are going to trust using a Chinese digital platform, given the heavy degree of surveillance conducted by the Chinese authorities. So I think cash is going to remain king in the black market, and that means the U.S. dollar is probably going to be pretty safe, as the reserve currency for the black market as well for the foreseeable future. But I think it's a fair point. I think people know this is coming. It's just a question of how do you structure it in a way that makes sense.
Well, we have questions from the audience, and so I'll start with the first one, drawing on from what you've just said. Do you think central banks would be responsible for administering the KYC AML requirements for retail CBDCs, or would other institutions have a role here?
Yeah, I mean, that's a great point, and another big question mark, and hesitation. Are central banks going to get into that business? Just like, are they going to get into the retail ATMs, tellers, and all this stuff? It's just such a huge undertaking for central banks. Again, another reason why I'm skeptical that they're going to do this anytime soon, number one. And number two, I think some kind of private, and this is where Giancarlo's, I think, approach does make some sense, some kind of public-private partnership probably is the solution because of the massiveness of things like KYC and AML and so on.
Absolutely. Thamim, I'll pose the next question to you. What's your take on the recent JP Morgan report on Libra and the potential impact of negative rates on their ability to stay profitable?
I think my thoughts on that would be Libra sort of has access to, I think the battleground is really the emerging markets, where Libra is kind of dominating with users on WhatsApp, Facebook, their marketplaces. I don't agree with that point. I believe that we're going to see a balance where JP Morgan will probably look at the wholesale markets and Libra will probably look at the retail side of that debate.
Okay. And to both of you, Garrick, let's take your view first. You're both economists. So in regard to benefits of CBDCs, can the panel offer a view as to positive benefits of using programmable money in a prolonged negative interest rate environment?
I saw this question. So from whose perspective, whose benefits? So obviously from the central bank's perspective, it's the, if there were no cash, like one of the things you hear about is the zero lower bound and how we can't push rates too negative. I mean, if you're getting charged 3, 4, 5% to hold your money at a bank, there's a real strong incentive potentially to actually pull out the cash and hide it under your mattress at that point rather than lose 3, 4, 5%, right? But if you can't pull out cash because we only have central bank digital currency, well, there you go. I mean, so you now have the ability to, credibly deliver negative interest rates. And if you're getting charged 3, 4, 5% every year, to hold on to your money, you're going to be heavily incentivized probably to spend that money rather than hoard it. So that's a bonus from the central bank and the authorities' perspective, maybe not such a great thing from an individual user's perspective.
I can't add any much more to that.
I don't have anything more to add to that. Well, we're actually out of time, so perfectly timed. Thank you both so much for joining me today. Great chat.
Thank you.
Cheers.
Pleasure.
Thank you.